What do you make of, I mean, we've talked about Abenomics a lot, you and I. Likely to succeed? Are we going to see a further correction in the yen in the meantime?
I think we'll see a little bit of a further short squeeze on the yen. I think the yen's moved a long way since the QQE expansion at the end of October. And the reality is that, the Bank of Japan and policymakers don't want to necessarily rely on a weak yen. They want wage inflation and inflation expectations and structural reform. I think as that message continues to be pushed, I think the yen's got some further scope to correct, maybe to 117, maybe 115 on dollar yen.
How quickly do you expect things to move now in Japan?
I think it'll be sort of relatively sort of slow. So I think we're going to see policies unveiled in the coming months. So I don't think we're necessarily going to see rapid action. One thing to watch out for, though, is that the nuclear power stations could be restarted, which reduces energy imports into Japan and improves the trade position for Japan.
All right. FOMC Wednesday, are they going to change their language? Is it going to change anything?
There's lots of hints that they'll move away from considerable period. The big uncertainty is whether that's a watering down of that language or whether they shift to an alternative set of language. So that's the big speculation in the market. If they switch to an alternative set of language, I think that will be seen somewhat more hawkish. And obviously the reflex on that would be sort of seen in terms of a higher dollar and lower bond prices.
Where do you see the Treasury yield going now?
I think actually, we've had a good run, and I think now we're going to be looking towards tightening next year, and inevitably I think that means that we've got a rotation back up towards 230 on a 1 to 2 month view.
All right. How much further can oil fall, do you think, Mike?
Well, if you listen to the oil analysts, they're sort of talking about $50 being the bottom now. And I think given the sentiment being so bad in oil, you could well sort of see that sort of occurring. But then we've had a very large move, and the risk of some action from OPEC does increase, and we should see a stabilization around there.
And do you expect, just to finish up with, do you expect the general uncertainty, which of course is reflected in the equity markets as well, to continue through the rest of this year and into next year?
No, I think what we're seeing in equity markets at the moment is a reflection of thin December conditions. People wanted to take a little bit of risk off the table, and the oil price decline is a reason for that. Ultimately, lower oil prices is good for the global economy. It's good for the global equity market. And I think that story will sort of come through as we get into the first quarter.